Good afternoon, this is Rich Nelson with Allendale covering the wrap-up comments here. Today's Wednesday, May 11th, 2011. Before we get into the exciting grain stuff here today, we got to point out crude oil and the dollar. Crude crude fell over $5. RBOB, the unleaded gas contract, down 26 cents here. Main move, of course, there was related to the U.S. dollar, up a large 80 cents, and this actually breaks it above this downtrend resistance. So some people might say we have a little breakout going on in the U.S. dollar. Of course, that is bearish for commodities, and including grains here today. As far as USDA's report, as Paul mentioned this morning, numbers were certainly bearish across the board for corn. Old crop going from 675 to 730 million bushels. As far as new crop, a little higher than expected at 900 million bushels. Allendale has released new price projections, which are available to research subscribers. So if you are not one yet, please feel free to give us a call or check out our website and get signed up and get those price projections. So keep that in mind there. As far as the other bearish thing beyond the morning report, ethanol production this morning, 862,000 barrels per day was last week's pace. Previous week was 875,000. This is the second lowest ethanol production number since September. So it certainly sounds bearish, certainly goes along with the whole bearish theme of high prices turning off demand. However, we will note that ethanol plant managers are saying this is spring downtime maintenance, not necessarily a problem with margins. They're actually still running profitable margins as far as ethanol. If you're a bull, do we have anything to hang our hat on here? Well, we certainly do, and the number one argument is acreage, both in the South as well as the Midwest. For the South, one newswire suggested 3 million acres of farmland in the South, meaning the Delta, underwater right now. Allendale's done our own research, and while that certainly may be true, let's kind of break it down only to the amount that's in corn or rice that could possibly be switched out, maybe going into beans. Total corn ground is 2.7 million acres. Total rice ground is 2.1 million acres. You figure maybe 5% of those total acres might be drowned out, maybe 10%, and that might be more realistic. And you kind of see why this news for the South really is not that big of an issue for corn there at least. As far as the Midwest acreage, if you're going to be a bull, this is where you hang your hat on. 10 of the top 20 states have acres or have plantings 20% delayed or more. Significant problems there. Of the 4 million extra acres we're going to get this year, 1.6 of those are in these key late planting states. So not only do we have some valid concerns about these extra acres getting planted, we also have some concerns about just, in fact, beating last year's acreage total in these key states. So that's certainly some issues where bulls have some valid arguments, which USDA did not address, and you know what, they're not going to address until the June 30th acreage report. That will be adjusted on the July 11th supply-demand numbers here. Soybeans, old crop stocks were raised from 140 to 170 million bushels. That was related to the problem with demand, and we mentioned this many times in previous commentaries. 160 million bushels was a new crop number here. Bottom line for soybeans, numbers are adequate. But one thing we might be surprised about is our price projections. So I mentioned there in the corn comments, we've got new price projections for corn. Same thing for soybeans. If you're not a subscriber, you sure better be, because that way you can get these great price projections we just talked about. And the soybean numbers might actually be surprising to you. Over on the wheat, numbers not too bearish overall. They kept old crop numbers about the same. New crop ending stocks lower than last year, of course, but a little higher than the average guess. We're certainly going to say that most of the pressure as far as soybeans and wheat were related to corn-based selling, not bearish news on the beans or wheat specifically by themselves. Over on the cattle, up $2 for choice on today's morning. Box beef up $1 there for select. Certainly good news with this Memorial Day-based buying we're seeing right now. Also return to some warmer temps starting this coming weekend. So that's certainly good news here as far as Memorial Day buying and the short-term news. However, June contract closed down 12. Might surprise some people. Well, if we have these good news, then what's happening in these futures? Why are we seeing this action going on here? Bottom line is, at least for the main kind of short-term picture going into summer, this is still a very bearish market. Last week's cash cattle was 115. This morning we see feedlots are already saying we will accept 113, a full $2 lower. Packers right now bidding 112, which is $3 lower. So certainly some bearish news going on for the big picture once we get through with this week's Memorial Day base buying. Now, my news is not all bearish for the candle. We've talked for many months the fact that this is a bull market after we finish with all the summer problem here. USDA's report this morning showed 2012 meat production estimates. Keep in mind, this morning's report is not just a grain report, it's actually a total agriculture report. For meat, for beef production for 2012, USDA said 4.3% lower than 2011. That's a sharp drop for 2012, and certainly keeps us on our toes with our very bullish expectations for the end of this year and through all 2012. As far as hogs, down 25 on the June, down 87 on the Dece. Key issues here with the hogs is the problem we have right now with demand, which we all kind of know about in the past few days. One thing that we can point out here is also this corn issue here. The fact that these hog contracts have been watching corn very closely, and there's a very strong correlation, corn prices going up, hog prices going up, and of course the same as far as the down moves here. As far as 2012 pork production, we can also say numbers were a little disappointing too. 2012 is going to see an increase of 1.4% over 2011 numbers. It's not going to be enough to really break prices that much, but it's more of a another slightly bearish issue here on top of the recent bearish pile. If you aren't a subscriber yet to Allendale's research, you will find some surprising news for our expectations for hog contracts and pork prices going into this summer. So feel free to keep on top of that. So bottom line today is, with all this action going on, has really things changed too much? Have we changed our price outlooks or marketing strategies? And the only way to find out with that is get a hold of Allendale's research. You can find that on our website, which is allendale-inc.com. Or sign up using the phone, 1-800-262-7538. Of course, our brokerage unit is certainly well available to take care of your calls, and that's the same number, 1-800-262-7538. This is Rich Nelson. Have a good trading day and a good trading week.